Good afternoon. My name is Joseph Camilleri and I am a non-executive director on a number of regulated entities, be they fund structures as well as fund management companies. I also hold office in a number of public and private institutions related to financial services. Today it is my intention to speak to you about recent developments occurring on the island in the fund management and in the fund sector. Over the past couple of years, we have seen important developments occurring on the island that are reinforcing Malta's positioning as an ideal domicile for such activities, that is fund management and fund business itself. The Malta Financial Services Advisory Council was purposely set up with the aim of delineating Malta's strategic positioning for the coming 10 years in financial services, including two funds and fund management activities. The MFSAC, as it is commonly referred to, is the coming together of public and private stakeholders on the island, namely the Malta Financial Services Authority itself, that is the regulator, the company registered, what we call the Malta Business Register, Finance Malta, the Tax Office, the Commissioner of Revenue, as well as the Malta Stock Exchange, as well as a number of other private associations representing the interests of various interest groups in the financial services sector. The strategic thrust in the collective investment scheme and fund management segments for Malta for the coming 10 years will predominantly be focusing in establishing the island as an ideal domicile for private wealth, private equity, as well as family office activities. A number of regulatory initiatives have been and are being taken on board precisely aimed at achieving such objectives for the jurisdiction for the years to come. In the rest of this recording, I will be speaking about some of these developments. Let us start off with the Notified Professional Investor Fund regime. Following Malta's success in the introduction of the Notified Alternative Investment Fund regime, which essentially enabled full-scope A firms to benefit from a fast-track process to launch their funds, while still benefiting from all the advantages of the AIFMD, including the passporting throughout the EU, the Malta Financial Services Authority has now introduced a new regulatory regime called the Notified Professional Investor Fund regime, or the Notified PIF, as it is commonly known. As stated, this will be targeting de minimis managers, that is, fund managers in the alternative space that are out of scope in terms of the Alternative Investment Fund Managers Directive, fund managers that are based in the EU or in other EEA countries. Essentially, through a notification process with the regulator, there is a 10-day timeline for such managers to be able to launch their funds in the alternative space. Another important development that is currently underway in Malta concerns DORA, the Digital Operational Resilience Act. As you are surely well aware, DORA will come into effect as from the 1st of January 2025. What we are seeing currently in Malta is that most of the firms operating in the financial services, including funds and fund managers, they are carrying out thorough gap analysis of the current structures and assessing and juxtaposing that against what is required by the DORA regulation. Essentially, the objective here is to ensure that as of day one, at the get-go, all the companies are fully compliant to the DORA regulation by having assessed the gap that currently exists between the current setups and what the regulation requires them to be at, and ensuring that a plan is put in place and executed prior to the end of this current year. And finally, I would like to speak about two other initiatives of the Malta Financial Services Authority, precisely the issuance of corporate governance codes issued by the regulator for regulated entities, as well as corporate guidelines for boards of directors of collective investment schemes. These codes essentially highlight the role of board of directors in establishing good governance practices, fostering trust with stakeholders, and creating value for all the parties involved. This code sets out the principles of good corporate governance, set out into four main sections. That is, the setting up of an effective board, the internal controls, the stakeholder engagement, as well as the corporate culture, which essentially would also include corporate social responsibility as well as ESG considerations. The board of directors of regulated structures, including funds, hold the ultimate and overall responsibility for the entity's corporate governance arrangements. And thus it covers what is expected of the chairman, the role of the chairman, the role of the board of directors, the individual directors sitting on the board, including the non-executive directors, investment committee members, as well as holders of senior positions within such entities. It also covers what board packs should effectively include as standard agenda items, as well as what is to be expected as content within the reports that are provided to the board and presented to the board by the main service providers. All of this aimed at ensuring that the best practices in the market are effectively adopted by regulated structures. Thank you.